Well, good weekend, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition where we look at the weekly charts and try to get a feel for what's going on with them. As you know, today, a big up day in the stock market, down in the gold and the silver a bit, the dollar down at the expense of most currencies, which rallied against dollar, and it's been one heck of a week in the Japanese yen, with suspected intervention going on, maybe twice. Grain markets, most of them to the upside today. Energy markets on the downside. We still don't know what's going on between Israel and Hamas. Can they reach a treaty of types? Just haven't the slightest idea. We do know that Hamas is in Egypt talking with the negotiators. We'll see if anything can come out of this or not. One way or the other, here's the news that I suspect. Whether Hamas takes a deal or not, you're just months away from the end of this. If they take the deal, it ends peacefully, whatever that might mean at the end of the day. If they don't, Israel probably goes into Rafah to end it in a 3-month, whatever it takes to route whatever they feel they have to do to get this done. I think it serves everybody much better if Israel doesn't go in, if a treaty can be reached. We'll see what the politics of the deal are. Now, today was a big day. A big day. So let's take a look at what happened. We had the non-farm monthly payroll, 175,000 jobs, the very lowest end. I wrote yesterday a report to my full subscribers using that number, and 275 to 300 is the outliers, and the 240 is the center. So it fit in with what I was writing about. The unemployment rate did jump 1%, 0.1% to 3.9 from 3.8. But I've highlighted this part for you. Something stinks here. I think you're going to get a revision, all right? And the reason is you dropped nearly 90% in the government payrolls from the last report. Why? You get money in April. This is still where you're getting the cash coming into the market, and they didn't hire very many. I'm not saying I'll be right. Maybe there won't be a revision. I think there will. And you fell pretty hard, 70,000 jobs in the private sector. It doesn't sort of match up with what we saw from ADP. I'm getting too much mixed data to feel comfortable, but the overall report, until it changes, it doesn't change. You accept the fact that the Fed's going to like this. They're going to look through everything else. They're going to like the fact that the April service sector composite is in contraction. So for the first time, the market that had been holding everything together, the service sector, down. And the market's going to like what it sees there. You can also see that we were getting contraction coming in the business activity. We're certainly in contraction in employment. New orders is still expanding. And prices paid, well, that's the problem. They still jumped up here to 59.2. But overall, the headline numbers gave the market the pop. The question is there anything really to it? And will it hold? And if it does hold, which is what we all hope, is the soft landing, or, I'm not talking recession, just a soft retreat in place to the point where the Fed decides, something, we have to get ahead of the curve. We will start rate cut or cuts, whatever they decide to go with. This certainly puts this back in play for September. So you have to remember what I said, I'm looking forward to 3 numbers, the May number being weak as well. And then we get our June report and we get the June FOMC meeting. This is all coming together just the way we talked about. So nothing has really changed from my perspective. Okay. So let's take a look at the monthly chart. The word is monthly first on the S&P. You've backed off from a high of 5308.5 on a settlement, and you're 5154, so you're down about 150 points. Okay. 3% drop, not bad overall. When you take a look at what the S&P 500 did as we were falling down, and I was showing this to you all week on the weekly, I said, you're at that 18-week moving average when you came down there. I said, this is where the market, if it's good, has to bite. And that's what it's done. The problem would be if you came back through that low on a lower close, and until that happens, who is in control of the market? The bulls. Number 2, when you look at this chart action, you can't get away from the fact that this break took you out of the uptrend. You have a higher high and a lower low, and the battleground is right where I said it would be. This is the 18-week moving average of closes. Tell me you're not fighting that. So I'm going to repeat. Any close actually under 50.65 will make the chart look bearish. You don't want to see that, but anything under 63.5 really sets the market off to the downside, and that could end up here with even more of a correction from that level, potentially another 250 points or so. So you want to be somewhat careful in there when you're doing it. Who's in control in terms of momentum? The bulls, but you're not trending. A higher high and lower low is measured by the swing line, and that's an absolute high and a break low. That's not a trend that you're seeing. You lost your way with the slow stochastics a little while ago, and the market was calling for this correction. It all began right here. Now get ready. April 19th, you lost your reading, and you went right to the number. Often that's not the case, but that's where the battle should have begun. And it's exactly what has been taking place here. So no surprises from there. Now, if you were to ask me which is the strongest of the markets at this particular point in time, until you get back under this week's low, it's the Dow. And if it pops, could go up to the 39,976. Now, this is an outside week up. Do you know the importance of outside weeks? I'll talk about it at the end of the video as I show you my outside week course. It's very important. I can tell you what you don't want to take out if you have bullish hopes is this week's low. If you take it out, the odds are then, the odds. If you take that out before you get up, whatever the high is, if that's taken out this week or next week, you're going down then to wherever that lower Bollinger Band is. In the NASDAQ, you have the trend down. So you've got three different pictures going on here. You got the S&P, no man's land. You have a downtrend in the NASDAQ in the swing line. And you have a bullish condition in the Dow on everything. Very strange. The bias is up, so the markets had a correction phase like the S&P. Went to the 18-day average fighting. And if we come back to the Dow, you can really say that's what went on there. Do you disagree with me? I hope not. Then we come over to the last part of this. Let's get over here where I went the wrong way. And I'll get you there. The Russell. You came down in the Russell from the Bollinger Band to the lower band and the challenge 3 weeks ago of the 100-day average. And I always preach the first challenge of a 200-day is so 200-week, 200-day, whichever it is, doesn't matter. On a one-year chart, just think of how long that is. That's the better part of a business year. If you got 265 days, you're at 200 of them. And it's 4 years practically in the yearly chart. Think about that, all right? And the weekly rather. 4 years. That's big time. So you're sitting there when you come down to this weekly chart, 4 periods, that's a very important number. And the market held it. Does it mean it's always a buy? No, but what is it? It's where the shorts often cover. Is this been an easy market to trade? Try the word impossible all in capital letters. You'll be hitting the right thing. The momentum swings are insane, and the market is not easy to trade. In fact, I think if you ask professionals, lined 8, 9 of them up, and I'm talking guys that write reports and they're known, they'll tell you this has been a very, very difficult week so far. Lots of data, a lot of it conflicting, all kinds of which ways. But if you think about it, the Fed got the reports today they wanted to see. Yes, there could be revisionments. Okay, but you can revise them up. And what if the next report that comes out in jobs is still weak? Doesn't matter at that point. So don't get carried away with that. But it just strikes me at odd. The government report fell 90%. It doesn't strike me as right. Market comes down here. Plays with the Bollinger Band. I'm looking for resistance on rallies up here into the 110 area. The market is oversold, so a bear market rally to correct an oversold condition can easily take place. I don't see a trend change, but we have to understand what some of these markets have done. The 10-year note went from almost a 5% yield to a 4.5% yield, lickety split. I mean, just kaboom and a big rally all of a sudden. Okay. We'll see what it means. Have you changed the trend? Not on the 5 or the 10. They're still both in the bear camp. They both have big resistance at the respective 18-week average of closes. Okay, so what about the dollar? I'm not surprised to see the dollar slip right here and the euro up. Why? You tell me where you're at on the weekly chart. You're at the upper Bollinger Band. So you fall back into the support right now at the 100-week average. If you look at this slow stochastics, are we still embedded? Embedded here. The week before, both numbers over 80 the week before. So can I get one more of them? There we go. Was it? So April 12th, not embedded. Both numbers April 19th up, both up here, and now up right here. So what you have at this point is the market is sitting here right at where it's got to hold. Now, if it gives ground, I don't think you'll stay much under the 104 area. That's the objective if you lose this momentum. If the market's going to be good by weekend, the market should be able to hold this area and be higher in order to keep this market into the area where both the red and the blue are over the 80 level. It's going to be a very important week in that market. And you have the flip-flop in the euro, but it never embedded bearish. So I'm looking at the resistance right here in the euro, not for the market to run against the dollar, but for the market as it gets away from this. When it reopens Sunday night, you're probably going to get both these numbers, a good shot of them over 30. They won't be oversold, and that could attract short selling. You have to wait and see what it looks like on the evening. In the Canadian dollar, it's very similar. So we're getting a bounce from Bollinger Bands to get a rally against the dollar. Does that mean it's a complete trend change? Well, some will say it is. Some are going to say if the Fed's going to start cutting rates and these numbers are for real, yes, you're at a very massive change. Another group's going to say, no, these numbers, they're the noise in the wind, but if you get a revision, it's not as strong. You're right at that wobble point, and that's what you're going to be fighting the rest of the month, all right? We're still going to get CPI and PPI. If they come out weak, that goes with the idea the dollar can weaken. If they come out strong, it'll go with the idea that, yeah, this was a setback, and maybe it's the beginning of the rollover, but it's not as bad as it looks. Those are the battles you're going to fight. In the end, it was only a question of when we were waiting for the intervention. I told you, you're going to wake up one day. I know I said it back here when the bank was threatening the intervention, and you'll get it. Nobody knows when it comes, but what I predicted, and I want to go on record, the pros are going to sell this market on the first challenge probably into that 18-day average at the 67.10. It's another 100 points higher, but it would not surprise me. What will get the market going the other way and hold rallies is some type of change by the finance ministry, the Bank of Japan, something to go on there. In Bitcoin, okay, you've made your correction point, and this is the point of inflection where it basically should have held. Any challenge against the 18-day average of closes, which was 57,176, the low 56,910, and the market held that point. So this is the first area where the market's going to try to find its support. Remember I said that, that's what I'm predicting. It doesn't mean it has to go up, but I don't think it's going to collapse from here. When we look at Brent versus WTI crude, market's pulling back to the 18-week moving average of closes. And what you did is you peaked out eventually at the combination of the 100-day average, and you hear me say this to you so often, and a Bollinger Band. And I know people say, oh, you got to buy over that Bollinger Band, it's going to keep going. You will get markets, probably each market once a year, twice a year can do that. It's rare. Cocoa certainly did it. Coffee can do it. You will get them that do it. And we certainly saw strength on the daily charts doing that at the beginning of this year when everybody was buying, if you'll remember, commodities, and it didn't matter, gold, silver. It was just a race to the top. And if you look back 3 weeks, those people are underwater if they held on to their positions. I did that already tonight in some of the reports that I'm doing. But you're now back to the point of neutrality. You're just wandering here looking, what is the next move? You're not trending. You have a higher high and a lower low. Same thing as in the WTI. You've lost your bullish momentum. You're back down into sort of no man's land in these charts right now. Gasoline took out the uptrend. You had one with higher lows, and then now you've taken that out, and you lost your upside momentum. The question is, has the market met its obligation by going to the 100-day average, or does it give you that little bit extra and you go down to the 18? Either way, you're not in an uptrend at this point in time. So you put it together, you look for clues in markets, and you look for ideas that can give you an edge. One of the trades you see all the time are outside days. They happen often. And they're either the end of a move or a continuation signal. They're one of the two. I walk you through my course, and we go to them, and we do it in spider stocks, ETFs, and futures. And we go through the whole thing, and we look at outside days, up, down. We first do in a PowerPoint, then we go to real examples. And with the course, you get my morning videos. So every day, Monday through Friday, I'm going through them, and I'm walking you through what they're doing and where they're at. You get the charting software, the videos, all thrown in, inexpensive. You learn from it, and that's the key. So how do you get this? Well, first, go look and see what I teach. It's all there on the website, iraepstein.com, and go to the research area or move your cursor up here. And I'm sorry, I said research education area for this. Go to education. That's what it is. It's a course on that. The research are my daily videos, but that's thrown in with it, as well as the charting software, so you can follow what I do and you do it yourself. I'm Ira. You have a great weekend. I'm glad it's over. It's pretty wild. Take care.